Thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We get into discussing what's impacting mortgage rates and whether it might come from the economic data, could be from geopolitical news or headline. We kind of give an explanation of why rates are doing what they're doing on any given day, and sometimes a combination. And if you're on the sidelines and watching, and rates aren't going the rate you think they are because we got good news, and well, that could be the market sentiment has changed, and now bad news or good news is now bad news. And we're kind of here to kind of give those explanations for you, so that way you can have a better understanding of what's going on with the mortgage rates. You could be a consumer maybe looking to refinance a purchase and trying to figure out, what's a good time. Well, hopefully these videos will help you guys make an informed decision as to whether you want to lock in sooner or later type of thing, if you want to hold out or not. Or maybe just in the industry and just kind of watching, just want to get an idea what's going on with rates as well. A little bit about myself, so I'm a loan officer. I do work with the national lender. We do loans in all 50 states. So if we can be of service with any refinance or purchase needs, please reach out. We're here to help you guys out. But more than that, we like to be a resource for you folks. We'll work to try to get any answers you guys have. If you guys got questions about something, please reach out. We're here to try to help you guys out as well. Without further delay, we'll just jump right into the video here. We'll start off with the economic calendar. Today is kind of a light one. We just got the factory orders for the month of February. So month of January, it was revised slightly higher from 1.4% to 1.5%. Forecast is calling for a 0.5% drop in there, and it came in expectations. So in February, factory orders declined. Now, this week has got a few things, nothing really major coming out here, but the big one this week probably will be really not really economic data, but it will be actually the Fed minutes, FOMC minutes on Wednesday. So that will probably be the big one. People want to kind of see what's on the Fed's minds, if it has any leads in there as to how they're going to reduce their balance sheet. That's going to be a big thing. Forecast, the rate hikes, if there's any talk about rate hikes, maybe at that next meeting, if there's going to be half a point. Uh, but I think they're figuring maybe at least next four meetings, there might be a half a point rate hike. So, and then maybe a pause. So just be prepared for some choppiness. So we got the Fed items here. Uh, Still, of course, we're looking at Ukraine-Russia conflict. Looks like there's some more sanctions being brought to light, that they might be implementing more sanctions against Russia from Europe and U.S. And we'll have to wait and see how that transpires. But um, those are most of the news we got going on here. So it's kind of a easy day. Stocks are up. Mortgage-backed securities, as you can see here, for the most part, is not really moving a whole lot. We're kind of a -3 for the day, but almost unchanged. So there's not much going on right there. With some slight movements here. I mean, these look bigger than what they really are, but we did have a few movements right here early on, especially early on. We went up and then we came back down. We've been kind of the sideways pattern here for the most part. And so what does this mean? Well, it's not enough any movement in there to have any change in mortgage rates. So mortgage rates should be comparable to what we saw on Friday's close, which we ended up closing down 9 basis points from Thursday's close. So not too bad. Right now, we're on the yields. We're up about 2.4. And something else to note, we are still at an inverted curve. So if you look at the 2-year, we're at 2.445. The 10-year's at 2.401. So the low obviously is higher than that of the longer term, which short term over inverted over long term. So if this stays true, it's an indicator. It's not what drives a recession, but it's an indicator a recession could be coming. Well, let's touch on that here for a second. The Fed's going to be raising rates over the next course. We don't really feel those rate hikes immediately. It takes a good 6 months to 9 months until we feel those. So most likely a recession won't happen this year, even later, half of the year, but we'll probably start feeling a slowdown towards the end of the year, around Christmas time or so, and then probably looking towards 23, if there is to be a recession, that will probably be more likely to happen if one is to occur. All right, so hopefully that makes sense for you folks. Makes sense of what's going on and how to kind of look at those inverted yield curves. So they're just kind of indicator. They're not what drives actually a lot of other factors drive it. But it's just a kind of a indicator of what happens, and it's been pretty accurate over the years as to over time. But they just don't have a time. There's always a time lag between that when that happens and when actual recession happens, and there's no specific time frame when that will occur. It just kind of indicates that at some point it will happen. But anyways, not to touch on that. To move on, lastly we'll look at the average rate for conforming loan limit. These do have points built into it. So we'll start off with the 30-year fix, which is at now 4.88%. So it moved up slightly from Friday, and then 15 years at 4.22%. So they did worsen a little bit from last week. So just give you a heads up. All right, folks. If you guys need a rate quote, again, we're here. I'm with an lender. We can certainly work with you guys on that. If you are looking to buy or sell, we can certainly give you quotes. If we could be of any service, please reach out. If you guys like these videos, please help us out. We greatly appreciate you helping us, and smash that like button and share and subscribe. We are here to help. You guys have a great rest of your day. Thanks so much for watching. We'll see you tomorrow. Bye-bye.